Hey everybody, welcome back to the channel, and this is the May 2019 update. Wow, April has been a great month for the stock market, and the real money portfolio is up 24% year to date. That's an amazing result, and I'm very pleased with the result. Um, there was a little bad news yesterday with Google's results, and that brought down the percentage performance a little down, but overall, it's still been a very great year so far. Um, I did purchase some Intuitive Surgical. Intuitive Surgical fell a bit, I think, during the month of April. I think it fell almost 15%. I'm very bullish about this company, and I decided to buy $2,000 worth of shares for Intuitive Surgical. So I'm buying on a dip, and I'm quite sure that the price will rebound. Why am I so sure that Intuitive Surgical will rebound? Well, I think there are a couple of reasons, and I encourage you to read this article about the reasons why you shouldn't panic about the earnings miss. I think briefly, you know, Intuitive Surgical has a very wide moat. There was a little lower revenue. That was because now instead of selling the machines, they're actually selling them on installment plans, and so that brings down revenue in the short term. But over a long term, it's definitely increasing the installed base. There was a bit more increased spending as well because they're expanding internationally, especially in developing countries like India and China. And I think more importantly, I think they're just years ahead of the competition. There's no real significant competitive threat to their monopoly basically on the robotics industry. So I definitely see this company doing much more and achieving much more. It has a great management. They're very cash rich. They like to under promise and over deliver, and I'm sure they will keep beating expectations in the future. The other disappointing performance was by a stock called Google. So Google fell almost 8%, I think, yesterday. Um, so I'm a little disappointed, but I'm more disappointed with the market reaction actually than the performance of the business. I thought the results were decent. Revenue is still increasing, and given that it's such a big company, revenue increasing at even 16% compared to expected maybe 17 or 18% is still an enormous achievement. And I mean, I have here on the screen some results for Google over the last 5 years. So earning per share have been increasing at 19.6%. Revenue has been increasing at almost 20%. Cash flow has been increasing at almost 19%. So these are amazing numbers for a company of the size of Google. And its moat is really unquestionable as well. I mean, everyone uses Google, YouTube, Android, Google Maps, Gmail, and so on. So I'm not adding to Google at this point. If it drops another, maybe let's say 7 or 8%, I will probably add more to my Google position. It's already quite a big position in the real money portfolio, as you can see. I have almost 12% here, and I have another 2% in the Class A shares as well. So I'll add if it falls another 5 to 10%, and I think it's definitely a good investment for the long term. Now, I do a monthly comparison of the real money portfolio against other funds available out there and other ETFs. So I've decided to add a new ETF to the monthly comparison. This ETF is called the Vanguard Information Technology ETF. And so what it does is seeks to track the performance of a benchmark index that measures the investment returns of stocks in the information technology sector. And the reason I decided to add this was because I was really blown away by the performance of this ETF. If you look here at the performance over the 1 year period, it's been 26%, 3 year 28%, 5 year 20%, 10 year almost 20%. These are amazing results. And this is an ETF. Basically, is a do nothing passive kind of investment. You don't need to pick stocks. You just buy this ETF and you sit back and relax. It's a little worrying that since inception is about 10%, and I think I definitely can beat 10%, or at least I hope so. But over the last 10 years, it's been almost 20%. And that's even better than one of the other funds I compare the real money portfolio against, which is the Fundsmate fund, which I'll get to shortly. So, what are the holdings in the Vanguard Information Technology ETF? Well, you have the usual suspects. You have Apple, Microsoft, Visa. Intel, I'm not such a big fan of. I mean, I don't really understand it. Not that I'm not a fan of its business. You have Cisco, Mastercard, Oracle, Adobe, and so on. You can look at the holdings. There are almost 319 holdings, and you can look at them in more depth on the page. And the other, very, clear, obvious winners like Salesforce, PayPal, WorldPay, and so on. So it's definitely a very promising ETF. So I'm gonna add it to the monthly comparison. So coming to the monthly comparison, let's see how Warren Buffett is doing and how the other ETFs are doing. Warren Buffett's not doing the best so far this year. I think he's struggling a bit. It's about 6.9%. The S&P 500 has been doing about 17+%. The Nasdaq QQQ ETF has been doing about 22%. Market is struggling a little, but the clear outperformer, the standout outperformer really is this Vanguard Information Technology ETF, 27.8%, almost 28%. Is doing better than the real money portfolio at 24%. Maybe I should just, stop thinking so much about the stocks I'm picking and just invest in this ETF. But like I said, I mean, since inception, it hasn't done, 20%. It's done about 10%. But that's almost, I think, almost like 15 years or so. So I think I can beat that. So let's see how it goes in the rest of the year and, the coming years. But it's definitely a ETF I'm going to keep tracking, and I'm going to compare my monthly performance to as well. And finally, Fundsmate. Fundsmate is doing not too bad as well. It's come back. It's up about almost 18% year to date as well. So guys, that's the update for the real money portfolio in May. I expect it to continue to do well. I mean, we've had a red hot stock market so far this year. We might see a correction somewhere in the later part of the year, 10%, and I definitely plan to keep adding to my positions, especially my core positions. I'm also thinking very carefully about how I can narrow down my positions. Should I be adding more to Amazon? Should I be adding more to Facebook? Should I be adding more to Alibaba and so on? I keep thinking about that as well. And as the days goes by and as I have a clearer picture of their mode, I'll make that decision. So I hope you enjoyed this update and have a great day.